The Bank of Canada's interest rate announcement arrives in moments from now in a cloud of uncertainty thanks to a shifting trade war with the United States. Most economists expect the central bank will deliver another quarter-point rate cut, making it its 7th consecutive drop, going down to 2.7%. While it waits to see how long the dispute with Canada's largest trading partner lasts. Joining us now is financial analyst Bryan Borzykowski, and you put your phone down, so that means you know.
I did put my phone down. They just revealed it just as you were finishing that up. So they did do a quarter point. So 2.75% is the overnight rate now, and that impacts all sorts of things: mortgages, variable rate mortgages, borrowing. So it was at 3%, now 2.75%. The key here, which I don't have enough time to look right now, but I will be looking right after, is what is the Bank of Canada saying about this? So the expectation of a rate cut, people thought that might happen, especially with tariffs and trade wars, and how does that impact the Canadian economy? We want to see what is he's having an announcement at 9, like he's doing a press conference at 9:30, but there is a press release now. So if he's saying, will there be more, what the expectation is around the Canadian economy, those are the things that I will be watching for to see how far does this go? How many more rate cuts do we see? I think there will be more, but where do we go from here? It's not necessarily the cut that is the big news, which it is news, but what is he saying about the cut?
So 2.75, it hasn't been this low since 2022.
Yeah, exactly. And it was only April, in April last year where it was at 5%. So it's come down quite a bit, 7 consecutive rate cuts. If there were no tariffs, this might have been a different story. He may have, standed pat and waited to see the economy was starting to get better again. Where would he go from here? There were still expectations that there would be rate cuts, but the tariffs have a much bigger sense of urgency here, because if they do come into play, and there are ones today on steel and aluminum tariffs, but if the bigger ones on 25% on all Canadian goods, that could really hurt our economy. And so by lowering the rates, the idea is, can they get people to spend more? Can people have more money in their pockets because it'll be cheaper to borrow? Mortgage rates might go down, or at least if you're renewing now, it won't be for as much as it would have been, last April. So would you have more money to spend in the economy? That's the idea with bringing those rates down.
There's so much uncertainty, and that's the problem with Tiff Macklem coming up with a decision, because we don't know where we're going, right?
It is so uncertain, and it's unprecedented in a lot of ways. And we've said that word a lot with COVID, with supply chain issues causing inflation, but this really is. Like, there is nothing to really look at to say what we can do, because this is really manufactured by Donald Trump trying to fix what he thinks is a trade imbalance. And so it's hard for central banks, for sure, and for Canadian consumers to know what happens next.
Okay, so do we buy that big luxury item? Do we hold off on spending money? What do we do?
I mean, I think it really depends on your personal situation. If you're going to borrow money, let's say if you're going to want to buy a house, now interest rates, there's lots of reasons why you might buy a house because of lifestyle, but if you're thinking about when should I buy, will rates go down, I think you hang on for a bit longer, because rates, I think, will fall further over the next year, and then maybe see where you're at with your mortgage rates. If you're buying, another big ticket item, cars, that kind of stuff, there's an argument to be made, buy a car now, because tariffs could come on and making those cars more expensive. So you kind of gotta, do what you gotta do, but there's some things you might want to get now depending on when tariffs, or if tariffs get put on, and other things you might want to wait for if you're borrowing money.
Our inflation rate is at 1.9% at last check.
Yeah.
The Americans just got a lower interest rate, or inflation rate as well.
Yeah, it went down. It's at 2.8% annual growth, which is still a little bit high, but it is below expectations. So actually, markets in the U.S. Opened. They just opened. We're doing better today, but we've had a really bumpy ride on the stock markets over the last little while. They've been down quite a bit since the beginning of the year, and I think it's going to get even bumpier as things progress. We don't know. Day to day, there's always a new announcement. It's very difficult for anyone to plan, businesses, consumers, but also investors, and that's why we're seeing a sell-off. And Trump said he thinks the U.S. could go in a recession, which you don't usually say out loud, and he is, and that's why markets have really been reacting the last few days.
So our inflation rate is at 1.9% right now, which is where the Bank of Canada wants us to be, below that 2% mark. But does that put us in a better spot if things go really bad?
It does. I mean, that's a great point. It does, because we're not dealing with 3% inflation anymore. We're dealing with closer to 2%. And so if prices rise because tariffs make things more expensive, the companies have to pay those tariffs. They usually pass them to the consumer. At least the prices have moderated. The increase has moderated over the last little bit, which means when they do go up, won't go up maybe 3 to 4%. It'll go from 2% to, I don't know, 2.5 or 3. Right. So that is better for Canada, but it's hard to predict where things are going to go.
But Tiff Macklem did say that it's hard to predict, like you said, but it could potentially take us longer to bounce back from perhaps a recession or a really downturn in the markets.
Yeah, I mean, they're predicting if tariffs come into play for a long period of time, we will go into recession. That's what they've said. It sounds crazy to me because, again, just sort of a man-made kind of a recession. And that will cause a lot of pain because you could see job losses in a recession. You could see businesses close if they can't, if consumer spending slows down because people don't want to buy stuff because it's more expensive. Right. So we're kind of going into a very difficult time, and it's hard to know how it'll play out. I think eventually it'll moderate. If these tariffs stay on, people will get used to them. Hopefully prices won't continue to increase. They'll have, they'll increase because of the tariffs, and then they'll moderate, but anything can happen.
All right. Well, Bryan, thanks again for your time. You heard it here first, 2.75%.